and welcome to So Small Report on Friday the 9th of June with me, Richard Perrin, market analyst at Asset Markets. Now, the big news overnight has been that the UK election has returned a hung parliament. Now, the political implications of this I could probably witter on about for hours on end, but this is a 5-minute video, so let's just be quite concise. Now, this means the Tories are in a minority government at the moment, possibly in light of a coalition agreement with the DUP. Sterling has fallen sharply on the back of this, not arguably as much as possibly had been expected. Now, what we have got, let me just move that and bring that in. What we have got is sterling down 200 ticks. Now, you could see that continuing to fall if the uncertainty around the government continues, but at the moment it's held up fairly well, actually, I would say. But I'll go through the technical implications of this breakdown in my cable analysis in a bit, but certainly the markets are sort of sterling negative today. Now, we've also got to digest the fact that we're seeing dollar strength. Now, we have seen in the last sort of 24 hours or so the testimony by James Comey, the former FBI director, that didn't really contain anything really that the that can sort of go towards impeaching President Trump. So subsequently, the outlook has been improved, risk sentiment has picked up, so Treasury yields are higher on the back of that on both the 2-year and the 10-year. So that has helped to stabilise the dollar, pulled a bit of a dollar rally, which continues today. Now, that is impacting across markets with gold lower as well, and it's a very interesting move. Sorry, just one final factor of this decline in sterling. Weaker sterling generally tends to mean a FTSE 100 rally, and that's what we're seeing today. Now, normally on the back of such uncertainty, you wouldn't see a FTSE rally, but certainly I think the weakness of sterling has helped to drive that FTSE rally today. So that's basically where we're at today. Now, there isn't any economic data due today. There is overnight we have had the Chinese inflation, which basically came in line with expectations on both the CPI and the PPI, so not a great deal there. The UK industrial production, not great actually. That's not going to help sterling either. Not great on the industrial production numbers, but other than that, we're fairly sort of devoid of any economic announcements. But my chart today is the Euro Aussie. Now, what we have seen in Euro Aussie is this rally, sort of basically since February, pulling higher. Now, you can see here a consistent run where you get a succession of higher lows. Now, that succession of higher lows has now ended with this correction that we've seen in the past week. 49.25 broke to the downside, and we've seen 1, 2, 3, 4, 5 sessions in a row of lower highs, lower daily highs. Now, is that a sixth today? It looks like it. 49.25, bang on that resistance. That old support becomes new resistance, and it certainly looks as though the market is sort of breaking lower and correcting lower. Look at these momentum indicators. RSI below 50, having sort of been strong above 60. MACD lines corrective crossover and accelerating lower, and the stochastics also look the same. So it certainly looks as though this is a corrective chart now, and having broken below 49.25, you could start to build a new trend lower. Now, you'd start to think about sort of selling into strength and lower reaction, lower highs forming, but we could see certainly a retracement to that 46.70 level, which basically is around this 46 to 46.70 old key pivot area. So we could see a retracement back towards that area, I think, in this move. So that would be possible, I think, now with the market turning corrective. Now, you'd say that little intraday rallies are a chance to sell. You can see the momentum setup is negative on the hourly indicators with the MACD lines below neutral, RSI below 55.60. Just downtrend in place. You've got the falling moving averages providing resistance. It all pretty much set up to selling into any sort of intraday rallies now. So we've just had an intraday move below yesterday's low, or the previous day's support 48.20. That has now been broken to the downside intraday today, just by a few ticks, but certainly looks like the market is sort of building for further declines and further retracement. So it looks as though this one is tracking lower as the Aussie starts to outperform, and that would drive a correction towards the test of 46.70. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.